Cyprus extends suspension of FTX's European arm by another 6 months. Crypto regulation. FTX bankruptcy. The extension prohibits FTX EU from offering services, advertising, or accepting new clients. Last updated. November 6, 2024 at 08:56 GMT+2. Author. Ruholamin Haqshanas. Author. Ruholamin Haqshanas. About author. Ruholamin Haqshanas is a contributing crypto writer for Cryptonews. He is a crypto and finance journalist with over 4 years of experience. Ruholamin has been featured in several high-profile crypto. Author profile. Share. Copied. Last updated. November 6, 2024 at 08:56 GMT+2. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. The Cyprus Securities and Exchange Commission, SEC, has extended its suspension of FTX's European division, FTX Europe, for another 6 months. The decision, announced on November 5, delays the firm's ability to operate until at least May 30, 2025. The extension prohibits FTX EU from offering services, advertising, or accepting new clients, though it allows the platform to complete transactions and return funds to existing clients. SEC halts FTX Europe's operations for 4th time. This marks the 4th suspension extension since SEC first halted FTX Europe's operations in November 2022, following FTX's bankruptcy in the United States. At that time, FTX had operated in the European market for only 8 months, offering regulated investment services for multi-asset derivatives. SEC's initial suspension cited concerns about FTX Europe's management and emphasized the need to protect client assets amid the company's U.S. financial crisis. FTX Europe, originally known as Digital Assets AG, was acquired by FTX in 2021 for $323 million. The acquisition later drew scrutiny from FTX's restructuring team, who claimed the acquisition price was significantly inflated. Legal disputes over the acquisition ended in February 2024, when FTX reached a settlement with the original owners to repurchase FTX Europe for $32.7 million. Currently, the FTX Europe website no longer offers trading services. Instead, it provides users with a portal to view balances and request withdrawals. SEC regulations stipulate that funds remaining in user accounts will be held in a client-segregated account for 6 years if not withdrawn. Meanwhile, in the U.S., the Justice Department is seeking the return of up to $13.25 million in political contributions linked to former FTX executives, as revealed in a recent federal court filing. Judge Lewis Kaplan, who is overseeing the criminal proceedings against former FTX CEO Sam Bankman-Fried and his associates, approved the government's request for an extension until January 15 to negotiate with various political action committees, PACs, SBF's neurodivergence disorders impacted trial. Last month, a group of doctors submitted an amicus brief in support of Sam Bankman-Fried's appeal, claiming that his criminal trial may have been significantly affected by his neurodivergence disorders. The FTX co-founder, who has been diagnosed with autism spectrum disorder, ASD, and attention deficit/hyperactivity disorder, ADHD, faced serious challenges during the court proceedings, the doctor said. The brief, signed by 8 doctors specializing in neurodivergence, highlighted that several rulings during the trial were detrimental to Bankman-Fried due to his conditions. The amicus brief also coincided with another filing by a group of bankruptcy law professors who expressed concerns about the intersection of FTX's bankruptcy case and Bankman-Fried's criminal trial. Although they did not take a stance supporting either side, the professors argued that the cooperation between the FTX bankruptcy estate and the prosecution could set a dangerous precedent, encouraging the use of Chapter 11 proceedings to bolster parallel criminal prosecutions. Follow us on Google News.